that may be a concern of yours, which I don't blame you. All right, let's talk about my new business and what it has to offer you. Joining this mentorship gave me the confidence to start this. So, what am I talking about? And what is it? How could it help you or someone you know? How are you going to be protected? And the versatility involved, that makes all deals a win-win for everyone. Now, anyone that knows me personally knows a little bit about what I have: a portfolio of rental properties. I've bought a few, I've sold a few, and been doing it for about 6 years on top of my regular W-2 job. Since then, I've also started a mobile axe throwing unit. Yes, a little side business where I have a little bit of fun and make a little bit more money. And on top of that, network with so many different people. And some of those transfer into real estate. I have also done a fair amount of borrowing and lending, which is what I'm going to talk to you about with my new business. I'm going to be covering topics like, what is private lending? How does it work? What are the risks and rewards? And how are you protected? How much of your time is involved? How are you in control as the lender? A few ways deals can be structured, and as well as how I am going to be able to keep on top of this, keeping your funds safe while doing all that I do. It's not just me. It's the network I have behind me, covering the paperwork, using a TC or transactional coordinator when necessary, using a self-directed IRA. Why do I need your money? Wait, is this legal? And how do I get started? Now, if you haven't figured it out already, I am talking predominantly about private lending. There are so many different ways that you can put your hard-earned capital to work, diversifying outside of your normal 401k or other retirement plans. So take out a pen and get ready to write down some questions as I go through this little presentation to tell you all about the topics that I just mentioned. And before I dig in depth into all these topics, there are so many links in the description below that will help you understand private lending, how to comp deals, how to understand what properties rent for what in certain markets, and so many more, along with some self-directed IRA videos where I sat down with Jill Banner from iPlan Group to cover what a self-directed IRA is and many of the different things you can do with a self-directed IRA. So what is private money lending? Private money lending is a type of lending that occurs outside the traditional banking system. Private lenders are individuals or companies that lend money to borrowers who are unable to get loans from the bank. This type of lending is often used in real estate transactions, but can also be used for other purposes such as business loans or personal loans. So, how does this work? When you lend money to someone through private money lending, you are essentially becoming a creditor or the bank. The borrower will sign a promissory note that outlines the terms of the loan, such as interest rate, repayment schedule, and collateral. If the borrower defaults on the loan, you have the right to foreclose on that collateral. So, what are the risks and rewards? As there are risks in any investment, private money lending is no different. As you should with any investment, including your 401k, which most people blindly trust and have no idea what they're really investing in. To be a safe and successful private lender, you need to understand things like how to comp properties. Is there enough equity in this deal that if I do have to foreclose on this property, I can get my investment back and hopefully a little bit more? As well as, what does the contract say? What did you agree on? Anything that you talked about needs to be in the contract. It doesn't matter if it's a handshake agreement. If it is not in writing, it never happened. In any given market, if you are lending on a property that's going to turn into a rental property, see if that property is going to cash flow, so you know if that's a safe investment you can make with your capital. Also, and this is a huge one, so listen up. Never lend money straight to a personal account. Yes, your money's good as gone. I don't care what the contract says. If you get it back, you got lucky, and you're just working with an honest person. Always open escrow with the title company. That money should be wired directly to the title company. They are only going to distribute those funds to whoever is supposed to get them within the writing of the contract. So that's your intermediary that isn't on either side, the borrower or the lender. Now, some of the risks of private money lending. Well, we talked about it. The borrower may default on the loan, which could result in you losing your money. The borrower may also not repay the loan in full, which could reduce your returns. The borrower may run late on repayment, Therefore, you should have some type of escalation clause in your contract to supplement for late days. Now, there are many rewards of private money lending, like the potential for higher returns than you can get in your traditional 401k or other brokerage accounts. The ability to customize a loan to fit your specific needs. All right, now that we covered some of the risks and rewards, let's jump into how much of your time is actually going to be wrapped up in this private money lending. That really all depends on how active you want to be. Some of the things that this really depends on is the length of the loan term. Maybe if you don't want to be super active, you will lend on some type of loan that has longer loan terms, 5, 10 years, longer if that even makes sense for you. If you do not want to be comping deals and reviewing contracts over and over again, find a deal that's a longer loan term and you just have passive income rolling in. Now, I will say those are usually a little bit lower yield than if you did some of the shorter lending. Now, it's more work, but you usually can earn a little bit more on your capital. Now, like I said, this all depends on which you agree with and which you need from the funds you're lending out. Also, another thing that can really depend on how much time you put into this, if you feel the need to maybe check in on the properties you're lending on or understand and see all the progress of the property. Some private lenders really do want to see step-by-step what's going on, and some just want that passive check coming in every month, or that lump sum at the end of the loan term. Let's now cover how you are in control. Protection. We protect you with a promissory note. This outlines the deal that we structured. Security. I record a mortgage attached to the property. You now have a tangible asset that I cannot sell without a payoff letter from you. Insurance. We can add you to the landlord policy or whatever insurance is required for that deal that we are putting together. We also get title insurance on every single deal. More times than not, we won't have to use that. But for those times that we do, which may never happen, but if they do, that's a really nice insurance to have instead of finding out weeks later that you may have a big lien on the property that first title search just may have missed. Now, with that being said, private money lending, if your funds aren't lent out, you're not making any money. So if you're not active looking for the next deal and getting ready to line up those funds when they come back in, you're going to have a lot of dead days, which could actually end up making that yield on your funds less than if you would have just lent out at a lower interest rate for a longer period of time. So think about that when lending private money. Do you want the short-term stuff where you almost got yourself another job because you're going to be comping deals constantly and running through paperwork? Or lending longer, a year plus, where you're not going to have to do as much paperwork, but the yield is going to be a little bit lower. And the last thing that I do, and you should strive for when you are lending as a private money lender, you should ask for a personal guarantee. As all of these loans that you will be doing, especially with me, will go to one of my LLCs. What happens if you may have missed a comp on that deal and you weren't quite on your numbers and there's not enough money in the deal in order to cover you if something goes wrong? Well, I'm confident in my deals and I feel like I am using your funds, or I'm bringing someone to the table to partner with me using your funds, your hard-earned funds. So I am responsible for that. Therefore, I give you a personal guarantee, so you do have the ability to come after my personal assets if a deal does go a little bit sideways. Let's jump into a couple different ways deals can be structured. There are many ways to put deals together and different needs from the borrowers and lenders. This is not a one-size-fits-all business, which is really what I like about it. A deal one person may not feel is right for them may be the exact deal someone else is looking for. Let's jump into a few different ways. You have your interest-only monthly payments, simple interest, your lump sum payment, joint venturing, which is partnering, owning equity in the deal itself. This also somewhat falls with partnerships. There will be many different deals where someone will put in the knowledge, sweat equity, coordination, management, and you are the capital partner. There will also be times when you are just the private lender in first or second position and are just earning an interest rate. Now there's also gap funding where sometimes someone needs a little bit more for a rehab, maybe to furnish it if it's an Airbnb or a midterm rental, closing costs, or if they're running a little behind on a project and they want to refinance out their old lender and you're going to come in for a short period of time to fill that void until that project gets back on track. Now, in lieu of foreclosure, if your borrower is not paying, The first lien position will get their full invested amount first. If there's anything left, that second lien position gets the next amount of money. Third lien position, fourth lien, and so on, if there is multiple lien positions on a property. Now, if there's any profits over all the lien positions getting paid out, that's where contracts and what the contracts say that money gets distributed happens. So, depending on what the contracts say is where that money goes. This is why before lending, especially if you are in second, third, or even fourth position, you are comping this deal correctly and understand how to do so that you put yourself in a safe, secure investment. And there's actually collateral backing it, not just a house that everyone already has liens on what it's worth, and you're lending on, well, hopes and dreams that this person finishes their job and somehow makes this property cut all that part. Let's jump into how I will be able to stay on top of this, keeping your money safe. Well, doing everything that I do. This is not a broad topic, but a point of lending to me specifically. As many of you know, I have a lot of things going on. I still do work full-time at Venture Industries in the research and development department, programming machines and running parts. I also have my axe throwing business and my rentals to keep track of. On top of this lending and borrowing business, and well, all my YouTube channels, which really I only do when I have extra time. Those aren't my priority. So, keeping your funds safe with all of this going on in my life, that may be a concern of yours, which I don't blame you. I am starting to delegate many things in my business, realizing the things that I'm not good at or I just really despise and don't like doing, and hiring those out to other people, interviewing many different people, and understanding different softwares that are going to make my time that I'm using the most efficient for what it needs to be used on. Like, I am hiring out my bookkeeping. Do I understand how to run my numbers and manage my books? Yes, but it's something I really don't like to do. I can check up on it and make sure that all my books are still in line, but as far as keeping track of all the transactions coming in and out daily, weekly, monthly, that's not really what I think my time can be best spent for. I also hire out all the repairs on my rental properties now. I don't do any of my own work. And that being said, a lot of my contractors are built into my property management software that I use, Hemlane. I also started to use a CRM, which I am building out, called Deal Automator. And I am in the process of interviewing virtual assistants, which may take a few months to pick who I'm really comfortable with, but I do want to start initial calls going into them to see if whoever's calling me for whatever purpose is an actual deal or connection that needs to be made, or if it's someone that's honestly just wasting my time. As well as leveraging AI. There are so many AI tools that make your job so much easier, especially with YouTube, emailing, outlining presentations like this. And well, let's talk about that. Gling, which I'm going to use for this video you're watching right now. I'll see how much time it really saves, as it seems like this is supposed to take your whole video and edit out as much of the mistakes you've made along the way, and we'll see what it comes up with. Now, I'm still going to probably have to throw that into my editing software to go over, fix a few things, and, add my special effects and such. But hopefully this will save me so much time in my video making process, cutting out all of my mistakes. Next, it's not just me. It's the network I have behind me. I am part of a mentorship and a great network of people in the creative finance world. I started in this mentorship program called Gator Lending. It may not be the cheapest, but it brought me so many high quality people that are driven and doing this every day. It brought me professionals in every little niche that I was looking for, that I need help understanding, or things that I'm not going to do in my business that I can hire out. People that are doing this every single day, and this is their full-time job. So many things in the creative financing space that most people have no clue are even legal, let alone understand what they are. But these people, they have it on lockdown. So that gives me the confidence to build out my team of people I can go to with any problem that comes across my plate. And this leads me into using a TC, a transactional coordinator. I will eventually take over the paperwork side of this, but right now I'm still a little bit green on understanding the paperwork on the creative finance side. I have all the contracts, I can fill them out, but I want a professional transactional coordinator to go over them with a fine-tooth comb so that every member in these deals are protected. Your hard-earned money, you are trusting me to deploy your hard-earned money. And I would rather take a chunk out of what I would make, pay a transactional coordinator so that we are all protected. And for the more creative deals, I do have a team of attorneys that I can go to write up specific contracts for the stuff that we don't have templates for. Using a self-directed IRA, I am not going to go over this in depth. This is just another great avenue for you to invest in real estate using your retirement accounts. I have multiple videos on my channel, which I'll link all those in the description of this video. 3 different videos covering self-directed IRAs in depth. Why do I need your money? Well, I am scaling my real estate business. I am trying to add more rental properties to my real estate. And therefore, I don't have to track down a proof of funds from someone else. I can just show my own bank account for proof of funds to prove that I have the funds to purchase these. I might not always borrow those funds, or sometimes I'll use my own funds very short term and have a private lender come in and cover that deal. Therefore, my funds go back into my bank account and I can still show I can cover multiple different deals that come across my plate very quickly. So therefore, I am more than happy to pay you whatever we decide on with our terms of the contract to make these deals happen. Wait, is this legal? Yes, it is. But depending on how your deal's structured, it can quickly turn to an illegal deal. Mainly because improper filings, bringing too many people in on a deal, raising funds without getting the proper filings from the SEC, so many different things, like borrowing from an unaccredited investor. The SEC really likes to protect the little guy, or so they say they do. Either way, we have to follow those rules. Next, how do you get started? Are you really thinking about this? We could meet up in person or jump on a Zoom so I can answer all the questions you have about investing as a private lender using a self-directed IRA. So many different things. And the questions I don't have answers to, I promise you I can find those and bring them back to you. So if you are truly interested, there are a few things you need to do. First, do your own research before investing as a private lender. I have many links in the description below that will cover so many of the things that we talked about in this video. And go outside of what I brought in and look for things yourself, not just relying on me for everything. Understand this inside and out, because you may have to do a lot of upfront work to truly understand what private lending is and making sure you are protected. But after that, it's pretty self-explanatory and you don't have so much work down the line. Build your network just like I do. Talk to other private money lenders. See what they're doing. Get the right documentation. Now, a lot of times, people like me will come in, whether I'm borrowing money from you or I'm joint venturing or partnering with somebody for their deal to pool your funds. We will have the paperwork. Now, you still have to understand what that says and make sure it is what we agreed on. So therefore, understanding the paperwork and having the proper documentation is very important. And again, I back my loans by personal guarantee. Not everyone does. I would say strive to find borrowers that do back their loans by personal guarantee. And I have a deal for you. Well, depending on how late you watch this, this may not be there, but I do have a property in an area where I live and it's in the market that I am most comfortable in and I know the best, that I have quite a bit of equity that I am looking for a second position loan at 9% for 5 years. So better rates than you're getting in the stock market. And a little bit longer term, but you can truly be a passive investor, not having to do the paperwork over and over and over again. Now, if you're truly interested in this, shoot me a message and I can get you all the details to this proposal if the deal's still on the table. Now, if you have any questions throughout all of this, which I hope you do, write this down and get a hold of me. Everything you'll need to get a hold of me and study up on this is in the description below. I hope this presentation really helped you out and helped you understand more about what I'm doing in my business.